do have yields just a touch lower as we get this breaking news bang in terms of the survey, the actual coming in, matching that for initial jobless claims, 225,000. Again, muted initial jobless claims, which raises a question for markets. How do you get a recession? How do you get some sort of downturn, of hard landing, if you don't see it in the labor market data at all? Continuing claims, however, did tick up, and this might be something that people will pick up, actually exceeding expectations at 1.7 million ongoing continuing claims versus the expectations for 1.69 million. Again, nothing to absolutely scream about and say that the sky is falling. Ticking up just a touch, but still, we have an incredibly low moving average of the past 3 months, Kaylee, really highlighting what is a very strong labor market, not seeing the cracks, and that's why you're seeing certainly a bit of a reaction, a bit of relief, ongoing relief in markets.
My question is, when are all the job cut announcements we continue to hear about going to start showing up in the economic data? Overnight, David Solomon, the CEO of Goldman Sachs, was talking about job cuts to come early on in January. We have seen it all throughout the technology industry, not just hiring freezes, but layoffs as well. You are starting to see the companies making the moves, but I feel as though we have yet to see it really meaningfully show up in the actual economic data itself.
Although, Kaylee, to your point, the sort of rolling ball of different scenarios, we're seeing perhaps the rolling ball of layoffs hit first some of the companies that were that staffed up the most during the pandemic. Tech in particular, banks another one. I mean, Goldman Sachs has something like 38% more staffers than it did back in 2018 today. So those cuts still are not necessarily bringing it in line. Matt, to what degree is this data instructive? Because even on a thin liquidity day like now, we're not seeing that big of a reaction. People seem to be shrugging it off. It's in line with expectations. Is it just simply noise at the end of the year? Or does this tell us something about the strength of this economy?
It's got to tell you that the economy is still strong, right? I mean, even if you have, it's not like people getting laid off in tech are going to work in some other sector. People that get laid off in banks aren't going to start working in automotive. You know, I think what the headlines that we see are just anecdotal stories here and there, and they just aren't borne out in the data. We don't have more than 4% unemployment. So obviously there haven't been a lot of firings this year, or else other industry participants have hired those people. So I can't imagine that the markets don't react poorly to this number, because it just shows that the Fed is having no effect on the labor market.
Well,